going on, guys? Welcome into today's show. I'm excited to introduce you to one of my good buddies, a good mentor, somebody that is a creative finance real estate expert. He has bought so many different deals, from mobile home parks to RV parks to triple net industrial, with little to no money, almost creative finance on all of them. You're going to hear some of the amazing strategies and tactics and how real world deals are getting done using some of these strategies. But for those that don't know who Gabriel Hamel is, Gabe lives in Oregon with his wife and 2 kids and prioritizes a few things in his life. He's got his family, his health, happiness, travel, and building wealth through real estate. In 2005, a year after returning home from Iraq, with the United States Army, he purchased his first property and continued on from there to scale his portfolio to over 60 million in real estate holdings, consistent of roughly 450 multifamily properties, mobile home parks, mixed-use commercial buildings, and industrial complexes. You're going to hear about many of those today. Gabe and I have been in the GoBundance Mastermind together for years, and this is one of the reasons why I'm so adamant about just getting in the right ecosystem. Any ecosystem that you feel is aligned with your goals, the people that you want to surround yourself with, that you want to learn from, be inspired by. He shares some cool stories around how that same mindset has led to many of his deals and opportunities. So I think you're going to get some great mindset conversation today, as well as some very tactical advice if you're somebody that is looking to break into real estate investing, whether that's single family or commercial. Gabe touches both, being that his journey started in single family and has landed him in doing big deals in commercial now. Just an inspiring dude to be around, extremely intelligent, and all around a world-class human. Let's dig into today's episode with Gabe right after this quick message. Gabe Hamel, how we doing, brother?
Doing good. Thanks, Maddie. How you doing?
Good, man. You were somebody that got me inspired and thinking differently. I thought I was thinking big and good when it came to creative financing and seller, financing, and all the different ways that I've seen and done it myself or learned from other people. But the way you think and the way you do things is just one level up that really has inspired and supported me. So I wanted to acknowledge you and give you some love for that. And I know we'll dive into some of that today, being that it's one of your specialties and how you've kind of built your portfolio with what you got. 8 mobile home parks now. You got an RV park. I know you had a really cool journey from single family into commercial, which we'll dive into. But dude, how are things going in your world, first and foremost?
Yeah, things are going well. I mean, real estate's always part of the journey, but it didn't take long kind of on that real estate journey to realize it. For me, it wasn't about the money, it was about the freedom. Freedom of time. And I think a lot of investors feel that, they want to build some wealth, but it's rarely about swimming in a pile of money. It's really about time freedom and able to do what you want with your life. And so, that's something I've been conscious of like pretty early on, when asking myself the question of like, why do I feel this just innate desire to build wealth and be financially free? And I realized it really was about owning my time. And a lot of investors I talk to that talk about financial freedom, it's the same. It's very similar. It's like, I want to spend more time with my family. I want to travel. I want to get back to some cause. It's rarely about, just, throwing a bunch of money up in the air and buying a bunch of fancy things. It's almost always about freedom in some aspect.
Totally. What? I don't know if I've ever heard your inception story of all the times I've hung out together, all the GoBundance trips. Like when did you get into real estate, and what brought you to real estate?
Yeah, it's a long story, but I'm happy to share it. So, I mean, going back to even high school, or even before high school, I was really the kid in school that I always questioned what the teachers were teaching, and I didn't really connect the dots of how does this relate to the real world? I had amazing parents, but they worked low-paying jobs. Wonderful people, wonderful parents, great childhood. But I always wanted more, and I watched a lot of adults. They would go to work. They would work the 9 to 5 or more. They would come home. They couldn't wait for the weekend or the 2 weeks a year vacation, and that just wasn't attractive to me. And then on top of going to school, I would always wonder how is what they're teaching me? I would even ask the teachers am I going to use that math in the real world? Do I need to know these things. And so I really only stayed in high school for the social aspect, and because high school wrestling was an important part of my life then. And so that's what really kept me in school. A couple years, or actually my senior year of high school, I joined the military. I joined the Army National Guard.
I didn't know that.
Yeah, at 17 years old. So I had a buddy on the wrestling team. He's like, man, go play in the woods 1 week in a month, 2 weeks a year. So just like the commercial. And I'm like, I don't know what I'm going to do with my life after high school. I'm in 6-year commitment. So I joined in 99. I graduated in 2000. And I'm just taking odd and end jobs and doing my once a month training. And in a kind of end of 2002, I read Rich Dad Poor Dad. And I used to be embarrassed to say, but it's actually the first book I ever read in my life, like word for word, cover to cover.
Well, that's a good one to start with, I guess, right?
Yeah, I mean, years later, I realized I had some dyslexia and stuff, like, which made sense of why I never wanted to read like a physical book. Audiobooks and podcasts have been a game changer.
Yeah.
But 2002, I read that book and I'm like, this shit makes sense. Like, these are the things that they don't teach in school. Like, it was speaking my language that I didn't even know was my language. I'm like, this makes sense. And so, end of 2002, real estate, investing, financial freedom, something outside of the status quo of get a job and work forever, was all of a sudden on my radar. And then shortly after that, I got a phone call early 2003, and I was deployed to Iraq for a year. So a 14-month deployment in Kuwait and Iraq. And I hadn't bought my first real estate deal yet. But that's where like real estate really got on my radar, was those early Rich Dad books.
Dude, I had no idea that you were in the military and you were deployed out there. And what were there any lessons from the military, or like things that you felt were built within you that you've kind of foundationally carried through other aspects of your life? I always find I'm sure you've seen this too with a lot of successful entrepreneurs, like certain guys that come out of the military, or gals that come out of the military, like they just have this level of discipline and drive and grit and consistency, and they don't get too high or too low. And now it kind of makes a little bit of sense. Like, you seem like one of those guys. Am I talking about you right now?
Yeah, I think my answer might be different than what you expect. So I think a lot of the like desire, discipline, determination, that grit, a lot of that came from wrestling. So
okay.
I didn't start wrestling until my freshman year of high school. I won a state championship my senior year, which was like, it took a lot of work and effort, like discipline and drive. It was the first time I really understood like mindset and having some big goal and then working your ass off to achieve it. So I think a lot of the lessons I learned in the wrestling room, on the wrestling mat, carried over into other aspects of my life and into real estate. With the military, and why I say it might be a little different, I realized really fast I hated having someone tell me what to do. Yeah. I hated having a boss. So honestly, like, I was actually living in a friend's attic for $100 a month prior to being deployed. I'm paying rent to, $100 a month. It was his attic space, and they said, hey, $100 a month. And I go up there and I'm like, I can turn this into living space. So I get deployed. I go from living in the attic for $100 a month. I read Rich Dad Poor Dad. I'm all inspired, and then I'm deployed. And so I'm telling all my friends, like, I'm coming back. I'm going to build this real estate empire. And most of my friends that I was deployed with, they're like, you're an idiot. Like, what are you talking about? Like, no college education. You've never had like anything close to like an actual high paying job or anything else. How are you going to, build wealth through real estate? And I remember thinking, I have no idea how, but I will. But, on that deployment, I did realize, like, I think the biggest takeaway is I wanted to own my time. I wanted to own my life. When you're in the military, like, you have someone telling you what to do and where to be. And there's a lot of things, lessons and things that I took from that. But ultimately, I really wanted my freedom, like my actual freedom. And so I came back in 2004 from the deployment, and I got completely out in 2005. And that ended up being the first year I bought my first rental property as well, was 2005. So I went over there with a lot of motivation. My goals overseas was like, come back alive, don't come back too messed up, and come back and buy some real estate.
I love it. So you came back, you bought your first deal. Like, how did that all come together? The inception of every real estate entrepreneurial journey is always fun, because it's either an absolute horror story, or it's hey, I got lucky and I crushed it, and then it rolled into the next one. What did yours look like?
Yeah, it was an interesting time, because I come back in 2004 and I started looking at property. In 2004, anybody could be approved to buy a property. And you do hear a lot of horror stories of people, overpaying and, being upside down, especially by 2008. But, it was a crazy market. I was looking at properties. I was making offers. I was approved to buy a single family home to live in as my personal property, and I had no job. I had no real income. My credit score was good because I didn't have bad credit, but I didn't have a job. But what I essentially did, I bought a home with no money down in 2005. It was an 80-20 loan, so it was two loans that equaled 100% financing. I rented out 2 of the bedrooms, which I think is a common story for a lot of people. Now they call it house hacking. Back then, it just made good financial sense. I lived in one room, rented out the other 2, lived for less than I could anywhere else. And so I did that in 2005, again in 2006, and again in 2007. And I was thinking like, this is too easy. This is like easier than the books. Like I'm just going to go to the bank once a year, and in 20 years, I'll buy 20 houses. In fact, it was so easy those first 3 years. I thought like, it's absolutely crazy that everybody doesn't have like 20, 30, 50 homes. And the other thing I did in that time, I opened up a small nutrition store in 2006 with a business partner, a guy that I was deployed with. It never really made a lot of money. Like some months we're talking like hundreds of dollars, like not enough to survive on. So fast forward to 2008, I have these 3 single family homes. One's my primary, 2 rentals that are kicking off a couple $100 of cash flow, not a lot. And I shut the store down in 2008. My first child's born in 2008. And I'm like, well, what do I do? Maybe I should go buy another property. So I go back to the bank in 2008 and said, hey, I want to buy a 4th property. And they said, you don't qualify. And I said, what do you mean? What do you mean I don't qualify? I've purchased a property the last 3 years. I've never missed a payment. I've always been on time. These are rentals now. They actually make a little bit of money. And they said, yeah, guidelines have changed. You actually need a job and a down payment and income. And I'm
Who would have thought?
Yeah, never knew that before. So, maybe this is why it gets a little harder. And so I actually had a lender say, what you need to do is go get a job. And I'm doing the math, and you need to save up X amount for a down payment. I'm doing the math thinking I'm qualified for nothing. Like being in an infantry unit in the military, you're really not qualified for anything. It's not a job in the civilian world you can go back and get. And so I'm doing the math, and I'm like, I would need like 3 jobs to save up enough money to then buy the next property. And so, I remember reading something about seller financing and private money and hard money. And I knew, partnerships. I knew there was other ways to buy real estate. I just didn't know what my path would be. And since I didn't know, I knew nobody with money, no one in business, no one in real estate, and I didn't really have much of a track record, and I wasn't interested in flipping homes. I didn't think hard money or private money would be my route. And so I settled on seller financing. By then I'm working a 30-hour a week minimum wage job. And I'm thinking like, how do I replace this income? So 2008, I'm working this 30-hour week minimum wage job. And every night I would just get home and I'm on Craigslist and I'm just searching for all the for sale by owner, seller financing, owner terms. I'm just type it in keywords on Craigslist, also the MLS, but mostly Craigslist, until, about a year later, after hundreds of conversations and, talking to 100 potential sellers, I put a seller finance deal together on 2 duplexes that cash flowed almost exactly to the dollar that I was making at that 30-hour week minimum wage job. And I was able to replace my income between the couple rentals I had and these 4 units, these 2 duplexes. I was technically financially free in 2009. I wasn't wealthy by any means. I had replaced this low paying job. And so that goal seemed very achievable because I'm bringing home like $1,500 a month. So if I could bring home $1,500 a month in cash flow, I'm technically financially free. So I did that in 2009. I finished out that year working, and then I spent the rest of 2009 through 13 buying all no money down seller finance deals. So almost on all small multifamily, some single family in there as well.
Now, to hear a little bit more about that, growing the momentum and the confidence and the deal flow behind the seller financing strategy, why did you what was the disinterest in flipping? I know that was kind of somewhat of a hot strategy and topic back then. Like, why did you decide to stray away from it when so many people feel like, oh, that's my path to riches?
Yeah, I think some of it is like I felt like I understood the difference between building wealth and making money. And a lot of it was those simple rich dad principles of like, assets put money in your pocket, liabilities take money out. I understood that real estate was an asset and I wanted to buy and hold. I wanted for the cash flow. In fact, appreciation and long-term equity growth really wasn't even on my radar. Like I wasn't focused on that at all. It was really like,
Cash flow.
I wanted cash flow because I wanted to live. I was trying to create a life that I could live off the cash flow. The appreciation, the long-term equity growth, it came later.
Yeah. Got it. That makes sense. So you were focused on cash flow, obviously starting to feel some momentum and confidence. But I feel like in those early years, right, there's still like this, I'm living broke to get rich and wealthy mindset and like season, right, before you really start to turn a corner. How were you navigating that time with like actually living your life, and you had a new baby and you're trying to grow and build this thing, but also, you don't want to go and work an 80-hour-a-week job and take on a career in something else. So like, how were you navigating that kind of messy middle from like, I'm in it to, okay, now I really need to find a way to like sustain my lifestyle and my family and still continue to pursue this dream of building wealth and cash flow?
Yeah, it's a great question, and it was a wild time. Like I look back, and I mean, people always love the story that I share that like we were literally eating off dishes that we found in a free box on the side of a road. Like we were so cheap. We were so like abundance didn't enter my life for so many years later. It was very much like, which seems crazy now because like abundance is just always on the forefront of my mind. But it was very much this mindset of like, I want to build. I was like singularly focused on like just buying cash flow real estate. And like I kept it really simple. Like our life was very simple. Our expenses were very low. We didn't go and do a lot of extravagant things, that we to do today. It was really focused on buying assets that cash flowed. And a lot of times it wasn't a ton of cash flow, but it was just stacking one property after another. And so the way I analyzed those deals early on were pretty simple. Like I would look at the last 3 years tax returns from the seller. I would actually look at their schedulees. I would know the current rents, and I was doing basic math. I'm like, and these were all no money down deals. So I'm looking at this going, okay, if this is cash flow positive, I'm buying it. Now, a lot of these properties have doubled, tripled in price since I've owned them. I still hold some of these today, but that was never the goal. A lot of wealth has been built through long-term of just holding these things, but the cash flows allowed me to actually hold these where I'm not in a position to have to sell. So I literally looked at, simple math. Like, I mean, I didn't know anything about cap rates. I didn't know I understood like cash on cash return, but I tried to calculate that on no money down. And I'm like, this is an infinite return. I was actually making money at closing because I was getting credits for the deposits and prorated rents. And I'm like, this is crazy. I just walked away with $5,000 when I bought this property. But really, I would just look at their schedulees and go, okay, here's the rents. Here's the historical rents. I never based it on what I could get rents to. I looked at that. I understood that. But I'm like, if nothing changed, worst case scenario, here's the financials from the last 3 years. If this is cash flow positive, I'm going to buy it. And there were some crazy moments. Like I had no money in the bank, and I'm not recommending having no reserves, right? But I had no reserves and no money in the bank, and a tenant would move out and the property was trash. And at the time, I'm like pulling up carpet. I'm like, that wood under that carpet looks pretty good. Like, I had enough maybe for like a can of paint. I mean, it was like, it was crazy times, but it always works out. And I think that, when I look back, the risk of not doing the deal way outweighs all the what ifs that could happen in real estate. Because I had so many people in my life going, what if this? What if that? What if this? Like, what if property values go down? And I'm like, I don't care. It's cash flow positive, right? Well, what if a tenant destroys the place? There's nothing to like fall back on. What am I going to go do? Worst case scenario, go get another minimum wage job. Like, what if it all goes right? So there's an aspect of that. I was willing to take the chance. I was okay not having a plan B. And my wife was also completely fine with it. She was like in nursing school. She graduated the day our second was born. Like it was just a crazy time. When I look back, I really wouldn't have it any other way. And a lot of it just came from the belief that real estate was my only path. That was my belief at the time. Like real estate is my only path to financial freedom.
So where in the path did you get to a place where you're like, man, I want to go bigger. I'm starting to understand this game a little bit more. and a couple $100 a month on my single families just doesn't seem like it's cutting it anymore. Like I've got bigger goals, bigger cash flow, bigger wealth goals. What did that whole process look like for you, and how and when did you pivot?
Yeah, it's a great question. There's a few different times where my mind really got opened up to like, okay, I need to play at a bigger level. So, by 2012, I have 17 units. I'm still self-managing, and I had never gone to a paid event. I had never spent any money other than a book. And I would go to all those free, like run in the back of the classrooms, stuff, and I would never be upsold. And I like prided myself on that. I'm like, I always learned something. I always learned a new term or a book recommendation, but I never paid for more. So 2012, I have 17 units, and I'm like hot shit in my little circle, right? Like most of my friends don't even have their first property, right? And I have 17 units, but I'm self-managing, and I go to or it's the real estate guys summit at sea, and it was the first year that Robert Kiyosaki went, and it was like $5,000, and at that time, $5,000 was a lot of money for me to go spend. But I'm like, it's Robert Kiyosaki, it's Kim, it's all their advisors, it's all these investors, and so I go on that trip, and the speakers were great, like the staff was great, but what really opened my mind was I met a lot of other investors, and they were all doing things a little bit differently, but I was meeting other investors that had hundreds of units, and some of them had thousands of units. And some of the advice, it was tactical, but some of it was just being in a room with people. It's very much like we know each other through GoBundance, right? And I think like with any good mastermind, sometimes it's tactical advice. You hear someone say something or see someone doing something that you think, oh my gosh, that's just an obvious. I need to go implement that in my business or in my life, and you're able to compress timeframes because you're able to learn something that it took someone 20 years to learn on their own, but you learn it through a conversation. And the other part of it for me in 2012 was just being around and in a room with people that were playing life and business and real estate in a big way. Yeah. So that was kind of the first aha, like, wow, I have 17 units and there's people that have 200. And it wasn't a jealousy thing. It was like, oh, wow, this is possible to play at a much higher level. So I get back to town. I turn my properties over to property management. I realized, for one, I never planned on managing my own properties. I was horrible at it. Soon after I got back, it's like 10 o'clock at night, and I'm like fixing a toilet, and my knuckles are bleeding, and we have the kids at home, and I'm like calling a plumber anyway because I'm not that handy. And I was like, you know what? I'm good at putting deals together and building relationships, but I'm not great at property management. And so that was the first turning point. Once I turned properties over to property management, I could really focus my time and energy on building relationships and putting more deals together. And so I started scaling into some mixed-use properties. By 2015, I think was the year I did my first partnership. I don't do a lot of partnerships, but it was the first year I partnered. There was a guy locally. We had a mutual friend. His skill set was he was flipping homes during the time that I was buying and holding, and so we had a great partnership where I was buying every single possible rental or property that I could that would financially make sense, and turn them over to him. He had the skill set of renovating them, and we'd keep them as rental. Some of them we sold. And that's kind of how I started to scale beyond that time.
I love it. And talking about property management, because that's such a key thing, and I know a lot of people struggle with it. They think that they need to self-manage, and that's kind of the rite of passage, which in a lot of ways it is. It definitely makes you more skilled and exposes some of the blind spots that a lot of investors who have never managed or operated an asset, kind of have. But what were, some of those foundational lessons with property management that you learned that, people maybe overlook by just going directly to a property manager, and then they end up kind of having a bad experience? And I always say, like, nobody's going to care about your wealth or your health or your kids, or like the most important things in life you got to care about. And so, not saying you have to get in there and get your hands dirty on every asset and property manage, but I've learned so many skills, and through a lot of challenges and face plants and failing forward moments, right? Of like the stuff not to do, the stuff to do. What were some of your biggest learning lessons being in the property management seat, and what were some of the things that you knew you needed to kind of audit before you handed those keys off to somebody else, and what makes a good property manager?
Yeah, I think like I've been very fortunate with having great property management companies manage my property. So I have all third-party property management. There is no in-house property management except for one property. I have an RV park, like a campground RV park, where I do have a full-time W-2 employee running that because it's a lot more of an operational business. Um, but in those early days, I literally started turning over the properties, the property management unit by unit as they became vacant. So it was a very slow process. But I think I did a good job of really understanding like a good property manager should add value to me as the owner and also to the property. Now I've gone through many property managers. I think today I have great property managers, and a lot of it's the communication between me and them and the tenants. And I think a good property manager, they have to have their systems in place, but they also have to be um I don't know. It's a tough job. Like they have to
Hard.
be people, right? Like because they're the face of the property. They're communicating with the tenants, so they have to treat the tenants respectfully. But they also sometimes have to be a hard ass and enforce the rules. And so, the systems I don't think are that hard, but finding someone with the personality. Like I
Yeah.
had an early property manager where like I was having a lot of vacancy and a lot of turnover, and I didn't really understand why. And I went to walk the properties, like all my properties with her early on. And I realized like she was very combative. Like half the tenants loved her and the other half hated her. And she was so mean to the tenants. And I realized like it was a personality thing. Her systems were okay, right? But it was time to let her go because I realized the personality and the way she came across to the tenants, I actually had a lot of turnover because of that. So I feel like I've always kind of upped my property management. But I like third party property management. Like you find someone that has good systems and understands your investment philosophy. Some of my property managers today are investors themselves, and some are not, but they're good with people. And I think that's more important than anything.
Man, that's such it's so funny that you brought that up, because I literally yesterday was talking with somebody around this whole topic. And if you're familiar with the EOS and the traction world of Gino Wickman, he talks about GWC being like, is it the right person in the right seat? And GWC, do they get it? Do they want to do it? And do they have the capacity to do it? And it's like how important it is for all three of those boxes to be checked when you're talking about a property manager, because a lot of times people get what is required of them in that role. They want to do it, but based on their personality, they just don't have the capacity to lead and to step into that role in the way that it needs to, right? And it is so interesting how you do have to find, like, it is that delicate dance of like being firm and disciplined with the boundaries and the systems and processes that are required to keep an asset and an ecosystem functioning properly, without pissing people off or allowing people to just walk all over you and say and do whatever they want, right? So like it's a delicate dance.
It's a hard job. Like I value my property managers. I thank them often. It's not a business I want to be in, but it's, and then I think it's important, like my communication with them, like I don't micromanage. I let them do what they're good at. I want to focus on big picture stuff, right? So if there's something out of the ordinary that we need to discuss or a big decision, I want to be a part of that. But like I let them do what they're good at, and I trust them to do that. And honestly, they should do a better job than I would do on my own. And I don't want that. I don't want to say I don't have the capacity, but like that's not my will. That's not what I want to be spending my time and energy doing.
Yeah. So you've got the capacity, you get what's required. You just don't want to do it, right?
Yeah,
Which
100%.
would make you a bad property manager long term anyways.
100%.
I'm the same way. So I love that you brought that up, because if you're not going to self manage and you don't have that desire, then it's so important to find a partner in property management that is going to protect your assets and your wealth. And you really decided, hey, my seat is I'm a deal maker, I'm a relationship guy, I'm good at engineering and kind of putting, all the puzzle pieces together. What did your first deal into commercial look like? And how did you put that together, making that transition from kind of single family and, kind of the
Yeah.
small 5 and under type of properties to going, I'm going to start playing in commercial and apply my skills here? What was your mindset, and tactically, what did that transition into your first deal on commercial look like?
Yeah, it's pretty interesting because I look now and some of my best performing properties are large triple net industrial deals.
Yeah.
They're commercial. I like commercial for all the reasons that you probably like commercial, and
Yep.
a lot of us do. But I was actually very resistant towards commercial for a long time. I'm a residential guy. People will
Me
always need
too.
housing. Will always need housing. They're rentals. They're rentals. And so my very first true commercial deal, it was mixed use, and that was a way of me being like, okay, well, there's residential and then ground floor commercial. If the residential makes sense, then we could fill the commercial. So my first commercial deal was with a partner. It was on this 12,000 square foot building in downtown Springfield, Oregon, which is a town over from me. And it was this old building where the fire marshal came in, kicked everyone out, every code violation you can imagine. But it was, we were able to turn it into 13 residential units. And then downstairs was a commercial space. And just going back to basic math, like we went and got a hard money loan, and we knew the residential could support the loan. So got a crazy good deal on the property. We got financing for the renovation, and the focus was, and I'm not the construction guy, but my partner was to get all the residential done. And so those 13 units, when done, the rents on that more than supported the building. Now, the rent on the ground floor, the commercial space, we have a high-end restaurant there, and it used to be a bike shop. Now it's a barber shop, like a salon downstairs. That rent is much better, right? It's commercial space. There, it's a better lease. It's higher rent. But that was actually how I got in and got comfortable with commercial, was by doing this mixed use. And then soon after, similar in another town about an hour south of me, very similar. It was a 22, 23 unit residential,
Okay.
like single room occupancy. And then downstairs was a cafe and a barber shop. And that's kind of how I eased my way into commercial. Shortly after that, I bought another commercial building where there was 7 multifamilies attached to it. And so I kind of eased into it. And then after that, I would just fully focus in the mobile home park space. I kind of micro focus. And so then I went fully into the mobile home park space for a few years, bought 8 mobile home parks and an RV park. And then it was really not until 2022 that I actually bought my first true triple net industrial deal. Now, some of my commercial properties I've converted into more of a triple net type lease, but today that is my focus, is selling off some of the smaller assets and really not taking down as many properties, but taking down bigger, more financially impactful deals, and that's mostly going to be in that triple net commercial space.
I love how you found a little vein there, and you use that as like a stepping stone to get kind of deeper into places while stacking the wins along the way. What led you to, obviously, a lot of different product and asset class types in commercial? What led you to kind of settling in on mobile home parks?
At the time, so I bought my first mobile home park in 2019. And I originally thought I was going to scale in the multifamily space. And I was looking at all things multifamily because I had a lot of these small multifamily, anywhere from 2 units to 15 units, some of that mixed use stuff. And I was really looking how do I scale? I didn't want to syndicate. I didn't want to raise capital. I don't have a lot of partners, and I don't syndicate today. I never have. And I like owning, 100% or the majority of the real estate myself. That's fine. And nothing against raising capital either. Like everyone, invests in real estate differently, and there's a lot of ways to have success and win in this game. But for me, I was looking at how do I scale? And I thought it would be in the multifamily space, like a lot of people were doing. But as I was looking at multifamily, I felt like the cap rates were just being compressed to nothing. Like prices were way up. I saw people just, overpaying, and they were just all these bidding wars for a very small return. And in 2019, you could still find double-digit cap rates in the mobile home park space. And so I had this multifamily broker that kept sending me all this A-class stuff on Portland, Oregon, in the city. And I would just respond every time and say, hey, I'm really not looking for, A-class multifamily. What I really want is value-add mobile home park. And so they had an in-house listing. They're not in the mobile home park space. They sent it to me. I've been analyzing and looking at parks for the last year, and I ran the numbers, and I'm like, this is a great deal. So I bought my first park in 2019. I paid 1.3 for that. That appraised out 2 years later, like 2.775. But there's a whole story there with like, those first several parks that I bought. But I just went all in on mobile home parks, 2019 to about 2022. And at the time, I think every asset class has been pretty frothy. Every asset class has been competitive, but I was able to pick up some great deals in in the mobile home park space. And I felt like a lot of those mobile home parks, those early parks, operated. The opportunity was very similar to those early multifamily, the small multifamily that I purchased, where it was poorly managed, under rented, some deferred maintenance, and it had an opportunity to create value without spending a lot of money.
Yeah. Yeah. And you're a master at that. We'll kind of unpack some of those. What do you believe makes mobile home parks great investment assets, and what are some of the nuances or snagging points or
Sure.
areas that people get in trouble with mobile home parks and it becomes a nightmare project for them?
Yeah, I think an easy one, like I like parks that don't have a bunch of park-owned homes. Like I don't want to actually own any of the homes. I want all tenant-owned homes. And so when I started analyzing deals, you will have a lot of brokers that understand that, but you also have a lot of brokers that don't. And so they're throwing in, these higher rent amounts. So the numbers may look good, but all the maintenance and repair are going to be on those park-owned homes. And so I think that's a huge one. Ideally, the majority of my parks, it's almost all tenant-owned homes. If there are park-owned homes, I'm selling them back to the tenants. So that's a big one. I think also, as you know, in commercial, like value is based on NOI.
Yeah.
And so you take a multifamily property, you want to increase NOI, you're doing that by rent increases, or maybe you're having to renovate these properties or decrease expenses somehow. In the mobile home park space, first kind of proof of concept for me was I bought this 43 unit mobile home park. Rents hadn't been increased in almost 5 years. My property manager sent out a notice that there would be a rent increase. It still kept them below market. So it was a slight rent increase. 6 months later, we did a utility bill back. That added $30,000 to the NOI, was spending $0. Right. And I'm like, oh shit, that's hard to do in multifamily. Like literally, we did a small rent increase. We build back utilities, and now that added 30,000 to the NOI without spending money. And I realized
What was that cap rate tied to that 30K?
Oh my gosh. I think so so I bought that for 1.3, right? So 2 years later, when I had that appraised, it was at 2.775, and I think that was at like a 6.5 cap.
Okay. So even if we just said, that 30,000 at a 7 cap, just by, like you said, right, not a ton of physical heavy lift and just getting strategic and creative and thinking outside the box, that 30,000 and NOI added at a 7 cap is almost $500,000 that you just added by doing just some small things there, right? Like that's just,
which is very hard to do in single family or small multifamily. Single family, the value is attached to comps or what someone's emotionally wanting to pay.
right.
And in commercial, it's the numbers. Like if you can decrease expenses and increase revenue, you can create millions and millions of dollars worth of equity, worth of wealth by just moving numbers, essentially.
Yeah. So how did you become a ninja in creative finance? Like for those that are going, what does a great deal look like from Gabe's perspective, based on the fact that some people might be overlooking these deals, or they may not be thinking about it through the lens of seller finance or creative finance? Like, how did you really strengthen that skill and, apply it in ways that have led to you getting 8 mobile home parks and an RV park and using a lot of seller finance and creative strategies with zero or little money down?
Yeah, in the early years, it was 100% out of necessity. So, like looking back, I'm very fortunate that I had no money, and I didn't feel that way at the time.
Yeah, right.
But at the time, the reason I say I feel fortunate, like it forced me to be creative. And so, back in 2009, when I was talking to all these potential sellers on Craigslist, I had no money. So I had to find sellers that didn't need a large down payment or really any down payment. And so with these hundreds of conversations, I found that sellers were interested in price or down payment or interest rate or some other emotional aspect of the deal. But it forced me to find sellers that didn't want cash for their property. They wanted income and they didn't need a large down payment. And so in those early years, it was really out of necessity. It was having enough conversations with enough sellers to find out what was important to them. And for some sellers and a lot of sellers, they wanted 40% down, 50% down. They wanted high interest.
Right.
Not every seller. I found sellers that were great people that were just tired landlords. They had maybe owned the property for 30 years. Good people, but they were tired. They were self-managing for 30 years. They were in their 70s. They were tired of managing and doing maintenance and dealing with tenants. They were tired of all the headache of the real estate, and they didn't actually want a lump sum of cash because they didn't want to pay a huge capital gain, and they didn't want to go reinvest that money actively because their active investing kind of cycle was done. They wanted to relax and get true mailbox money.
Yep.
So what I found is it really just created an opportunity, and I had to find the right sellers that didn't want a lump sum of cash. They didn't want to go put that money in the stock market. They didn't want to actively and go invest, and they didn't want to pay a huge lump sum capital gain. What they wanted was mailbox money without the headache of real estate. And so in those early years, it was finding properties that were poorly managed, under-rented, had some deferred maintenance, and finding sellers that wanted that income. They wanted that monthly check on an asset that they'd owned for a long time. They essentially went from being the investor and landlord to being the bank.
Yeah.
That's how a lot of those early deals looked.
How were you presenting these structures and kind of the mechanics of them, right? I know a lot of people are like, okay, it makes sense to me, but like, how are you presenting because obviously you've uncovered motivation. You understand that the mechanics and the engineering of the deal financially makes sense for you, and hopefully it can make sense for them. How were you presenting these and really helping people wrap their heads around what, creative seller finance deals and how they can be a win-win actually look like?
Yeah, I didn't go in educating them because I knew very little. And what I found, and I actually thought that was going to be my path to buying all these properties with seller financing, because I did a couple deals and I'm like, this is amazing. They're earning interest. There's a huge benefit to them. But then when I look back, I was like, wait a minute, I didn't convince or educate any of these sellers on why they should carry financing. After I did a couple deals, I realized those sellers, they already wanted to carry financing. They already understood the benefits of seller financing. And so I literally went in with genuine curiosity, not being the expert and asking questions. And so the questions I get asked the most are, how do I convince a seller into carrying financing, which I never have? And what are typical terms? And there are no typical terms. It's really whatever you and the seller can come up with. So my focus was finding sellers that already wanted to carry financing. Not that you couldn't educate a seller. You could definitely educate a seller on, hey, here's the advantages of carrying financing. You earn this interest. You're not paying, this capital gain all at once. But instead of doing that, I found sellers that already wanted to carry financing, already understood the benefit. And I would just ask the simple question, hey, what kind of terms would you be interested in?
Yeah.
That simple question, hey, what kind of terms would you be interested in? They would usually tell me, and sometimes it took an hour for them to explain it, but just asking that simple question, it usually came down to price, down payment, interest rate, or some other emotional aspect of the deal. And so I'd ask that question, and then I would just listen, and then it came down to basic math. Like, okay, if price is important, some sellers were stuck on price, some on interest rate, but they're willing to be flexible on the other part. So can I give them the one thing that's most important to them? If they're stuck on price, can I give them that price, but maybe do no money down and lower the interest rate? Or if they're stuck on interest rate, then maybe we need to change the price a little bit for it to financially make sense. So once I found the one thing that was most important to them, which they would literally tell me, I need this interest rate. I had one seller say, I need $11.25 a month. I just need $11.25 a month. So our contract didn't even have an interest rate in there. It actually acted as almost like an interest-only type payment for $11.25 a month. Well, the property rented for $22.50, right? So I heard her say, I just need $11.25 a month. And so I gave her what she wanted and then made the deal work for me. And that's where the magic of seller financing is you can really create that win-win scenario if you know what the seller wants. Now, it doesn't always work out. Some sellers want a crazy price or a large down payment or a high interest rate where you're going, this thing would be backwards. This would, I'd have to be feeding this thing $1,000 a month. And I didn't want those. But I think that's where those early deals were. It was just listening to the sellers, finding out what they want, and then creating that win-win scenario.
And I'm sure you hear this question all the time. Where do you find these sellers? How are you identifying these people that are already of the mindset and maybe motivation of like, yeah, I'll be the bank. How do we find those people?
Yeah, I think the sellers, they have to either know you or like you or trust you, or some combination. So those early deals, it was a handful of sellers, and a lot of those early sellers. It sounds funny now because I don't know if Craigslist is a great place to find properties, but back then it was. There were a lot of these mom and pop investors, owners, great people. They didn't want to put it because they were self managing. They didn't want to alert the tenants. They didn't want to put a sign in the yard. That's where I found a lot of them. There were some listed properties as well where the seller was open to current financing. And then I'll give you a great example on the second mobile home park that I ever purchased. I think it's a great example of building relationships, but also seller financing. And I will say too, like when I look at every single deal I've done, like any deal from my first one to every deal I've done up to this point, it's always come back to it's from a conversation or relationship. Every single time, it's a conversation or relationship. So in 2019, I bought my second mobile home park. But about 10 years before that, about 9 years before that, in 2010, there was a local developer and he was building all these amazing buildings on campus. And I'm like, who is this guy? Like, first of all, mobile home parks were not on my radar. Multi-hundred unit complexes fell out of reach at the time, right? But I grew up here. So I'm seeing all these amazing, beautiful buildings going up. And I'm like, I just want to know this guy's story. So I reached out to this guy, cold called him and said, hey, your name just seems to be attached to all these amazing properties going up. I'm just curious to your story. So that's like 2010. And so I go into his office and he explains, he's like, I call myself an accidental developer. I was going to law school in the 70s and I started buying these multifamily properties. And by 2010, there were great tax incentives to develop. And so I started developing this. Well, him and I stayed in contact. And it's not like, and I love sharing this story because it's an example of like a relationship with like no strings attached. Like I wasn't trying to get anything from this guy. I wasn't trying to buy his properties. I just wanted to know his story because it was inspiring. And we stayed in touch and he kept building these properties and he kept developing. And it's not like we became best friends. It's not like we hung out all the time. I think he's maybe 20 years older than me or more, but we kept in touch. And 9 years later, he said, hey, a friend's selling a single family home the town over. Are you interested? And I just bought my first park. And I said, no, I'm not looking at single family at all. I'm really interested in mobile home parks. And I said, I just bought my first one. He goes, that's interesting. I own 5. And I said, are you interested in selling any of them? And he goes, I am. And I said, would you sell or finance any of those? And he said, I would. And so because we had that relationship, we'd already built that know, like, and trust.
Yep.
We ended up doing a 2% down deal. It was 60% cash on cash. I bought that park for $780,000. That appraised 2 years later for $2.2 million. I ended up doing a cash out refi on that. I actually did a cash out refi on my first 4 parks. But it was an example of like, he had enough taxable income. So he didn't want a large down payment. He didn't want to be cashed out. And then we had already built that know, like, and trust. And so he was willing to carry great terms. Now, here's a sophisticated investor who was not focused in the mobile home park space.
Yeah.
This was like on the bottom of his list on properties that he needed to optimize. He's out there building like beautiful riverfront, like 200, 300 unit apartments. And so even though here's a sophisticated investor, it was a huge opportunity for me because it was still a park that was poorly managed and under rented and had some room for me to actualize the upside. But that was a conversation from almost 10 years before. And so, when I like people. And so when I meet someone, I don't care if, maybe they'll be an acquaintance, maybe we'll never talk again. Maybe they'll become one of my best friends. Maybe, I'll sell them real estate, something on my portfolio, or I'll buy something from them. I don't care. I like people and I'm going to treat people good. And if that turns into a deal later on, then great. And if it doesn't, that's great too.
That's a cool story. Everybody has that, one relationship that, turned into something amazing, right? And many successful people that I come across, just like yourself, they've got many of those one-off type of relationships so it's like, the takeaway there to me is always just you never know if this game of entrepreneurship, you just never know when you're going to cross paths with people again, or who you're going to pass or who's going to pass you. And it's just kind of that golden rule of like just always adding value and do unto others as you would want done to you, and just operating with integrity and ethics and just building a good reputation, because you just never know when it's going to come back around in a good way, or obviously if you're not sowing the best seeds, in a bad way, right? So I love that story. Before we wrap up, what's been one of your best, your most insane, most profitable, creative finance deals being that you started on this, small $200, a month type of journey, and now you're doing big deals. I just always love to show, like, for the person that's early on in their journey going like, man, that sounds nice. I remember, like, early on in my journey thinking, man, if I could ever, like, by the time I'm 60 or 70, own a commercial property, like, that sounds nice. And obviously my
Yeah.
journey has led me. So, like, what does that look like for
I'll,
you?
I'll yeah. I have one that comes to mind. And actually, I'll back up that mobile home park deal that I just shared. It wasn't, I got it confused with this deal. That was actually a 200% cash on cash year one, because it was
Crazy.
a 2% down deal. I got that 60% cash on cash confused with this commercial deal I did in 2023. It wasn't seller financing, but it was a creative financing deal.
Okay.
And I love sharing this story. So I bought a 34,000 square foot industrial deal in Iowa City, and this gets pretty interesting. So I bought it for 2.9 million, and the bank was willing to finance 80% of it.
Okay.
My broker financed 10% of it. It came as down payment assistance, and the bank was fine with that because the cash flow was good.
Okay.
So I'm supposed to bring in 10%. So 2.9 million. I'm bringing in about 300,000 down, so 10% down, and it's still a pretty good deal. But I was able to negotiate a $350,000 rent guarantee at closing, and that came as a credit. And normally that'd be escrowed. But what happened is, because the cash flow was good, the bank said, we don't need the whole 350 and we don't need to be escrowed. We'll give you 150 back at closing. And it actually gets better. So I pay 2.9 million for this property.
Okay.
I bring in a $300,000 check at closing. They hand back 150,000. So now I'm in this deal 5% down. And based on those numbers, that's where the 60% cash on cash came from. Okay. 60% cash on cash. Well, there's still $200,000. And the bank said, well, we don't need that to be escrowed. We'd like to have deposits at our bank. You can put it in a checking, a savings, or a CD. So I was like, all right, well, I'll put it in a CD and earn interest. So I'm into this deal 5% down. I'm earning money on that 200. And this is a 2-tenanted property. So one of the tenants is the oldest commercial construction company in Iowa City.
Okay.
And then the other tenant is actually the largest labeling packaging manufacturer in the world. They do 5.7 billion a year in revenue. And their largest client is a mile and a half from my property. And in fact, the whole reason I got that $350,000 rent guarantee is because corporate for that tenant said, we won't do more than 1 year lease increments. After our original 10-year lease, we'll only do 1 year lease increments. And they're paying above market rent. And I'm like, okay, that's fine, but I need some way to mitigate that risk. And that's how that $350,000 rent guarantee was negotiated. So I'm in this 5% down. The cash flow is good. That 200 sitting in a CD. And the bank said the only way that we'll release that is if they sign a 5-year lease, or when they move out, that'll go towards rent until you sign a 5-year lease. Well, they renewed for a year. And then on the next renewal, even though corporate almost never lets them sign longer than a 1-year lease, because their largest and best client was a mile and a half from that property, they signed a 2-year lease, and the bank released that money back to me. So now, I'm earning about $108,000 a month, or not a month, $108,000 a year in cash flow from that property. And I got all my money back. So I actually made 50 grand buying that property. So I'm actually no money out of pocket. And, it really opened my mind to the bank being willing to be creative. Like, I used to think of creative financing as those early seller finance deals. In fact, I never traditionally financed a property and was always like, that's just for refinances. That's just for refinancing. If you would have asked me a few years ago, I would have just talked about only seller financing as being creative financing. But it was, the bank was willing to be creative. The broker was willing to be creative. And it also goes back to relationships. Like, I had a good relationship with the broker. The broker had a great relationship with the bank. The bank liked the asset. They liked the location. They liked my story. And so I wasn't just leveraging the relationship I had with the broker. I was leveraging the broker's relationship with the bank. And it was a great purchase. Like, everybody won. Everybody came out ahead in that deal. The seller was happy to sell it. The broker's winning. The bank's winning. I think I probably won the most because I own the real estate. But it was just an opportunity of, the bank willing to be creative, and kind of thinking outside the box and putting a deal together that, maybe with traditional financing would have been an okay deal, but it became a great deal because of the willingness of everybody involved to be creative, including the tenant, the bank, and the broker.
That's so cool. I love those stories. See, I think that might have been the deal when you and I were flying. We had one leg together, and
I think you're right.
We were flying to the tribal council in I think it was in Austin, and you were telling me that deal, and that to me. And fast forward now to I'm buying my first mobile home park right now, and I am rolling $2 million equity from another property that I sold into this hotel deal that I'm doing all cash with the bank. The bank is partnering with me after they foreclosed on this hotel asset. There's a long story there, but I got them to leave in a couple $1 million in equity in the deal and partner with me on it.
Amazing.
But then I had $650,000 in debt that I had to get replaced on my 1031, or else that was going to, obviously be taxed. So I was like, man, I need to go out and find a deal that I can get, some creative financing on. So through one of my brokers that I've been, doing opportunities and deals with, she brought me this little mobile home park. I'm like, I don't do mobile homes. Like, that's just not really my jam. She goes, the seller's willing to get really creative if you are looking for, because she knew I had my 1031. So anyways, long story short, they were marketing it at 1.3. I got in contract at 650.
Wow. Yeah.
And I've got a local community bank that's going to do 75% of the purchase price, and the seller is going to carry back 100% of the remaining difference.
Amazing.
So 100% finance deal. They're going to defer the second, they're going to defer into second position, and 0% interest for the first 18 months. So it gives me some time to stabilize the park. And 6 out of the 15 pads are from family members that are paying no rent right now. I'm getting all of those leases signed and be walking it. So it's going to be a nice and juicy one. But to your point, right? Like, you just got me thinking differently around, like, creative finance isn't just getting a seller to get creative with you. It can be a bank getting creative with you. It can be brokers getting creative with you. Like, there's so many different ways to put, the Tetris pieces together to create a win-win for everybody and still make it a good deal, right?
100%. I mean, I think I used to have a fixed mindset around, like, banks don't get creative. And I do think commercial lenders have the ability. They do have the ability to get a lot more creative than the residential.
Way more.
Especially if the deal is good. Like, if the asset's good, like your deal, that's such a great example of everybody involved being willing to be creative. And I think, it makes me think about, like, deals. That's a good example too. Like, deals are not found, they're made, right? Like, like, you put together a deal like that was creative, that made good financial sense. It's the same with my Iowa City deal. Like, at face value, it would have been an okay deal, but it became a great deal because of the willingness to find a way to be creative and actually make it a good deal. And I mean, that's something I think about often. Like, deals are not just found, they're made.
Yeah. And I think especially in a market like right now where things are a little stale, you got challenges with interest rates and just things in general, like, these are the markets that creative investors can make a killing when everybody else is fearful or sitting on the sidelines or waiting for things to feel right. This is where you can get extremely creative and get people that are actually motivated to do something to the table if you can connect those dots. So, brother, as always, it is absolutely a pleasure to learn with you, to grow with you, to do life with you. I know a lot of people are going to want to know about your journey. You've got, the 0 to 100 tribe. You've got your podcast. You've got all kinds of great stuff that you're consistently putting out. Where's the best place for more people to connect with you?
Yeah, the best place to connect with me is just my Instagram account at the real Gabriel Hamel.
So we will be sure to link that up in the show notes on Gabe's episode, millionairemindcast.com. Mr. Hamel, appreciate you, brother.
Yeah, appreciate you. Thanks for having me on.
Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionairemindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at Official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.